Thursday, I told you guys that your bias in the short term on Bitcoin became bullish. And again, I mean, the little tidbits that I'm dropping in these game plans can literally make you guys money. Now let's talk about it. So basically what we had here, we have this trend line, right? So we have this trend line sloping up, we had this orange one sloping down. Now, one of the things that I was pointing to, and I'm going to zoom in on this because it's super, super important, is that if we take a look here, we know we had this trend line here, this trend line get hit here, here, and then also multiple times here and once here, and then we broke out. This was last Thursday, right? Thursday we broke out. That changed the bias. From that point, it now became a bullish short-term indicator. Now remember, short-term tells you nothing about mid-term or long-term. It's only telling you about what's going to happen in the next few days to week or so. But sure enough, we closed here.
Bitcoin is expected to break out and potentially reach higher levels, while the market may experience a decline in the short term. The current trend of Bitcoin is expected to be bullish in the long term, with potential resistance at the 28,800 to 29,000 level. If Bitcoin breaks above resistance, it could potentially reach between 30,000 and 31,000. Gareth Soloway predicts a small move to the upside in the short term, but overall expects the market to decline based on the charts showing lower lows and lower highs. The inverse head and shoulders pattern on the chart indicates that Walgreens stock will continue to rise after being artificially pushed down by ETFs and funds. In this video, Gareth Soloway aims to provide unbiased knowledge and trade setups, different from biased media, to inform viewers of short-term market moves.
Here,
listen to him now
consolidated on
as he
Friday
explains.
and Saturday. Sunday we ripped higher. Monday we're continuing up. Now again, couple levels to watch on Bitcoin, because again, to me, Bitcoin's going up here. I have positions with verified investing crypto members in altcoins like Cardano, which is showing us a breakout as well, and other altcoins. But the key here again is at some point, resistance is going to get this in check. Now there's a couple levels I want you guys following on Bitcoin. So where is your next Bitcoin resistance? Let's take a look right here. Okay, so if we look at Bitcoin, one of the things that I'm seeing is there's a lot of resistance at a former level right up here. So you're looking at anywhere between, I would say, 28,800 and 29,000. Now again, look at how price hammered on this level over and over again before breaking down. What that tells us is whether or not this was at some point support. You know, why it was, we don't necessarily know, but this type of action created support. What that means is if price rallies up into this, this is going to be now resistance to the opposing side. So that is going to be resistance anywhere again, 28,800 to 29,000. Now, should Bitcoin break above this level, let's say it puts in bullish consolidation and breaks up, you have a very clear upsloping channel or trend line that takes you back to between $30,000 and $31,000. So those are your upside levels. Now, do I think that all of a sudden Bitcoin's in a new bull market and going to be moving up beautifully? No, I don't necessarily think that. What I do think overall, if we zoom out on the chart, is that this is a common move where we see a move from this low to this low to this low. We then broke through it. Now you're retracing to the scene of the crime, back to test home base. That's a very common thing in technical analysis. All right, now again, what you're going to come into is that same resistance up here if we test it, and then ultimately if we confirmed above it, then you'd have a breakout. But one thing I always tell my traders, never assume a breakout is going to come until it shows itself.
Bitcoin is currently retracing to test a previous resistance level, and if it confirms above it, there could be a breakout, but it is important not to assume a breakout until it actually happens. Bitcoin's bias remains neutral to positive, with the speaker predicting a high value in the long term, and they also discuss the consolidation and trend lines on the chart for Cardano. Bitcoin is expected to reach 30 cents before encountering resistance, while gold has experienced a significant drop in price in a short period of time. The chart shows a parallel trend line that indicates potential support levels for Bitcoin.
Right? So many people assume they get on the wrong side of the trade and they get whipped out. Don't get whipped out. Okay, so that's what we're looking at there, guys. Again, I would just say this is my short-term bias remains neutral to positive, although the upside has now come in quite a bit. My midterm remains still bearish, and obviously, if you ask me where Bitcoin is in 5 years, I think it's much, much, much higher. Quickly, I just want to show you guys this. Let's quickly take a look at the Cardano chart. I just want to show you, I think these charts are very cool to take a look at. So what we've seen on Cardano, right? We saw Cardano essentially creating a consolidation line here. All right. And also what we can see here is we have a trend line. If I zoom out a little bit more even here, a trend line that's been sloping down on this here. Right? So we have this line. This is your short-term target on Cardano. So again, I don't really talk about alts very much with you guys in the game plans because, again, they're a little bit higher risk. I love this move up. You do have some resistance right here, but eventually I think this has a chance to get to about 30 cents before it runs into major resistance. All right, next we got to talk about gold, guys, because gold has been nuts. It's even surprised me. All right, so gold is down again today. It has fallen off the proverbial cliff. Now, I will say this. So, number one, you have to look at your overall time frames. Now, short term, there's no doubt about it that this move down is bearish on gold, right? I mean, not that it's bearish, but it's just that price has collapsed. Price has fallen basically $100 in essentially 1 week's time. Now, again, short term, we broke this support line. So where are we likely headed? Let's take a look at the chart. What does the chart tell us? The first thing I want to show you is there's a parallel coming into play. See this white trend line up here? I'm going to put a parallel on top of that, and we're going to use the parallel tool here to guide us to this level. All right, so let's do that right now. We put our parallel right on top. We drop it down. And what we could see is the parallel goes right through these lows, and that looks like it's going to be support. Now, to find a good, want congruence. You want multiple levels going through each other. And that's, again, going to give you more support. So what we then do is we look for a pivot point. And what we can do here is if we take this pivot point and we just drag a trend line across, look at that. So now we have this pivot low, which intersects this area right here around $1,810, $1,815. That, to me, will be significant support. Now, that's your short term, right? And you have to be able to divide your short-term investment view between your midterm and your long-term. So what's the midterm? Well, the midterm, to find your midterm, what you do is you zoom out on the chart. And to do that, we clearly see that we still have this upper range of consolidation going on. So we look at the bigger move. The bigger move was this, and then essentially we're doing this consolidation, right? Bullish, a bull flag of consolidation. This still, even with this little tiny move down, which when you zoom out is almost impossible to see, this still tells you that you're still well within the ranges of the midterm view that gold is still on the bullish side. The other thing to keep in mind that
Bitcoin is currently experiencing a consolidation phase, but the overall trend is still bullish, with significant support at around 1810 to 1815, and there is speculation about what is being created in a specific area. Bitcoin forming inverse head and shoulders pattern, potential breakout to $2,500, $2,600. Oil prices temporarily rose due to bullishness and institutional algorithms, expected to decline to $85 per barrel. Walgreens trade opportunity highlighted. Gareth Soloway predicts that Walgreens stock will continue to rise due to the inverse head and shoulders pattern on the chart, which was artificially pushed down by ETFs and funds.
Again, guys,
listen as he explains further.
Last week, I saw how much bullishness was out there. People were freaking out with oil overnight, mind you, when the volume is dead and it's just games being played by institutional algorithms. Popped to 95. It got the last few the bears to stop out. The bulls got on board, and then the rug gets pulled. So we see that very clearly here. And again, sure enough, we find ourselves already back down trading at 91. You do have some support in this range, but again, my estimation is we're likely headed back in this range. We're probably headed back to about $85 a barrel. All right, so that's just one little inkling of a chart I just wanted to show you guys. I want to go over one more chart with you guys. If we jump over to this screen, this was a highlighted trade from last week, okay? We're going to flip over to this chart of Walgreens. Now, Walgreens, guys, I highlighted this last week, and I got a lot of feedback on how cool this was. We had a RSI, right? So we had this beautiful RSI, inverse head and shoulders, okay? So again, I'm trying to get my draw tool there. There we go. So here we had this, this, and this. And I said, listen, this is getting taken out of the Dow. There's pressure because funds and ETFs have to sell. But once you get to the end of the quarter, which was Friday, this is likely going to pop. The inverse head and shoulders tells us that. What happens on Friday? Look at the candle to the upside. I still think this has more upside to go. The inverse head and shoulders is a thing of beauty here. And again, I would wager that this has minimal upside at least to this $25 level, somewhere in that vicinity. But again, we highlighted, or I should say I highlighted this chart last week to you guys. Friday, you already got the pop. I do think it continues. Maybe it pauses for a day, might need to consolidate. But ultimately, I think Walgreens goes up, pays a 9% dividend, trading at a ridiculous PE of like 6. It makes sense. It was pounded down artificially by ETFs and funds that mimic the Dow because it was being taken out of the Dow quarter end. So all those sellers had to dump their shares. That should be done. You should continue to see upside on Walgreens. Okay.
Don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.